A long list of the world's most powerful Wall Street banks, from Goldman Sachs to JP Morgan to Bank of America, they have described the current economic climate as the golden age of trading. This comes as no surprise, given that the current highly macro-driven backdrop that is fueling one of the greatest wealth transfers the world has seen. This, of course, presents savvy traders with back-to-back money-making opportunities. This month, the commodity markets, they recorded a net inflow of $450 million. That's the second largest monthly inflow in commodities seen this year. Traders are pumping more money into commodities at one of the fastest paces ever seen. This is to capitalize on the biggest macro themes driving the markets right now, from re-accelerating inflation, the de-dollarization movement, to an escalating global food crisis, which is sending agricultural prices skyrocketing to all-time record highs. And just in case that wasn't enough, traders are now on the cusp of being gifted with even more lucrative money-making opportunities, with the return of the global energy crisis 2.0, which has flared up again after the European natural gas prices they spiked to levels not seen since last summer. All topped off with the Brics major expansion to create a new world order. You cannot talk about commodities without mentioning the Brics. And that's because the Brics expansion will have significant impact on who controls the world's commodity supply. This positions the global power shift as one of the biggest and most pivotal macro trading opportunities of the year, if not the century. Last week, the Brics, which includes Brazil, Russia, India, China, and South Africa, they surprised the markets by inviting Saudi Arabia. That's the world's largest crude oil producer, and Iran, which holds the world's second largest natural gas reserves, to join the Brics group of nations. The Brics also agreed to admit the United Arab Emirates, Argentina, Egypt, and Ethiopia to its ranks, propelling global commodity control from 50% to 80% in what would rapidly become known as the dawn of the New World Order. The inclusion of these new countries, especially Saudi Arabia, the United Arab Emirates, and Iran, it doesn't just increase the size of Brics, but also their overall supremacy in the global commodities market. As it stands, the current 5 members account for approximately 52% of global commodity supply across the metals, energies, and agriculture. This new composition, including Saudi Arabia, the United Arab Emirates, and Iran, that will almost double the Brics market share, giving them control of nearly 80% of the global commodities output. This expansion of Brics will also lead to a shift in global commodities trade. Currently, most of the world's commodity trade, that takes place in dollars, but this expansion will enhance the de-dollarization movement and drive trade through their own currencies and not the US dollar. This de-dollarization shift, it sparked fears of a potential dollar dump, which also could result in a tsunami of inflation hitting the shores of the West. The magnitude of this situation should not be underestimated, as the trend continues of ditching the US dollar in favor of alternative currencies. As that continues to grow aggressively, more than 40 countries they've formally applied to join Brics, which indicates that the de-dollarization movement, that's only going to get bigger from here. And let's not forget, this global power shift also represents a move away from globalization and into a new era of de-globalization. According to economists, as emerging market powers turn inwards, building physical and economic walls to keep others out, less trade will exist, localization of supply chains will become the new normal, and protectionism will begin to sharply rise. Given the inevitable constraints of the flow of supply, commodity prices, they will surge, and many essential commodities the world depends on, such as metals, energies, and agriculture, they will grow increasingly more scarce. In other words, the global power shift is at the beginning of a massive inflationary trend. If history has taught us anything, then one thing that we do know for certain, there's a strong correlation between commodities and inflation. When commodity prices accelerate, so does inflation. As the world faces the real possibility of a second wave of inflation, the big question now is, will the Federal Reserve skip, pause, or hike interest rates in September? The answer to this pressing question may come from a string of eagerly awaited economic releases due out later this week, including US non-farm payrolls, GDP figures, and of course the Fed's preferred measure of inflation, PCE inflation data, which always has the potential to move the market significantly. Extraordinary times, they do create extraordinary opportunities, and right now as traders, we are living in some of the most exciting and rewarding times ever in history. Goldman Sachs has already begun preparing their their clients for what they predict could be one of the most profitable periods of the year. And it's not so different at the Gold and Silver Club. The majority of our clients at the Gold and Silver Club are utilizing our proprietary research-driven trading approach. They've already made in excess of 6 and 7 figures so far this year, and we still have another 4 months left to go. In fact, all of our clients have already been fully briefed, prepared, and ready to make the final 4 months of the year their biggest and best year yet. If you've been kicking yourself for missing out on some of the biggest trading opportunities so far this year, and you still want to make 2023 your best year yet, then just go to jointhegoldandsilverclub.com now to learn how our mentorship program can take your trading to the next level. Time is the most valuable commodity that we have. Make sure that you don't waste it. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we go into next week. So as you know, with platinum, we remain long from $902 per ounce. That trade is currently up 480 points at the start of the week here. So we're currently trading at $950 per ounce. We talked you through this the week before. Any opportunities at $900 per ounce or lower would be a fantastic buy opportunity for this market. And that's exactly what happened last week with the Brics Summit and also later on in the week with the speeches that we had at Jackson Hole Symposium from Jerome Powell. This skyrocketed commodities higher. And of course, the beneficiaries of that were the metals and the energies here as well. Last week, we also saw silver. This gained 6% to the upside. So this put our position on from $22.70 per ounce, really up nicely last week with a 6% gain to the upside. You can see we're currently trading back at $24.15 per ounce. Now, gold, as you know, we've been talking you through this as well. Great buy opportunities below $1,900 per ounce. So in the last week and a half, we managed to sniper into gold at $1,189 per ounce. We've of course seen a lovely breakout to the upside over the last week, and this came as a result of many hedge funds and money managers that have been buying back at the end of April and into the beginning of May above $2,050 per ounce when they got triggered to go long. We saw that coming up within all the data. They've been bag holding above $2,050 per ounce throughout May, June, July, and they were finally flushed out in August when we had a break back below the June swing lows. And once the hedge funds got flushed out, this is where we did see this big increase and rotation higher. We talked you through this previously. Any dips back below $1,900 per ounce, that would be a lovely buy opportunity. So far at the moment, our position from 1889, that's up 260 points with gold trading back at $1,915 per ounce. Now moving over to copper, this is also a position that we got into at 3.71. Currently the price is back at 3.78. I must say that our metal positions on these markets, they are protected at the moment as we head into a heavily news-driven week, particularly later on in the week with the non-farm payroll data as well. Now, palladium, again, this was a fantastic opportunity to buy and a retest back down towards 1200 the previous week. In fact, with our clients last week, we banked 1,000 points profit on palladium with a pump that we got all the way back up to 1290, which worked out well. We've had subsequently a retracement back down towards 1200 yet again. You can see it's been the case with many of these markets over the last few months that it is buy low, sell high, rinse and repeat. The most clear example of that has, of course, been Brent crude oil. So we talked you through this previously. We were a buyer of Brent at $73 per barrel. We banked 1,200 points on a breakout to $85 per barrel. We reversed, went for a sell short. We broke down nicely. As you mentioned last week, we had from high to low over a 500-point breakdown in price. All of those sell shorts protected, and then we rotated capital into the metals ahead of the Brics Summit last week and also the Jackson Hole Symposium as well. So I think you will agree if you go back and watch last week's report, everything that we discussed with you did indeed play out. We had over a 4% breakout to the upside with platinum. Silver broke out 6% to the upside. Gold broke out 1.5%. It's back above $1,915 per ounce. Palladium also broke out 3.5%, broke out 1,000 points to the upside as well. And copper broke out 2%, and that gave us a nice quick 100 points on that trade. In fact, in total last week with our clients, we banked 1,790 points of profit. So what else can we expect over the course of this week? Well, we do actually still maintain our natural gas position, and that actually had a nice gap higher on the Sunday open here back at 2.73. I'm essentially looking to scale out of more profit on this market if we get another breakout back towards 2.9 to 3.1. That would give us just approximately 900 to 1,000 points on our natural gas position, which has been a huge beneficiary off the back of the spike in European natural gas prices recently, and that has now started to knock on to US natural gas prices too. So that's a market I'm certainly looking at for opportunities. Now, be aware that at the moment on the Monday, it's a public holiday in the UK. So generally speaking, when you've got the LBMA closed, you can see later on in the session more more of a risk-on move for some of the metals, but quite often you do get a post-public holiday sell-off. So on the Tuesday, whatever pump you may get to the upside on the Monday, it's possible that you do get some degree of profit taking on the Tuesday here. So just be aware of that with the metals. Again, we took the advantage last week to bank lots of profits, 1,790 points profit. So all of those trades, they're now protected. So we're in a good spot here. If we break out further, very simply, the game plan is to scale out of more profits. And if we were to roll over and come back down towards the swing lows, I would look to reload at similar or lower prices on a lot of these markets. The other point to bear in mind is that we remain long the dollar as well. So our dollar position is currently up from 99.67 here. It's up about 430 points at the moment. So we are remaining long the dollar index here as we move into the month of September, which can typically be a risk-off month for the markets as well. There's a very different cycle that you want to capitalize on once we do start to transition into the month of September. And whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, now is the time to take action to give yourself the gift of a better 2023. If you want to maximize your money making potential and thrive, not just survive in these fast moving markets, then you need to adapt your strategy to the current market conditions. Most importantly, utilize a professional, research driven trading approach. One of the biggest obstacles that holds back 99% of retail traders from achieving their desired success, it's not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions with accuracy and certainty. There's a huge gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on outdated technical analysis and gimmicky technical indicators that don't work in these markets. If you want to get yourself out of the bottom 99% and into the top 1% who are actually crushing it and making 6, 7, and 8-figure returns in these markets right now, then you need to utilize a professional, research-driven trading approach, or you'll just end up wasting lots of time, money, and effort, and you'll have no results to show for all of your hard work. In these rapidly changing markets, you need to be constantly innovating and evolving. Technical analysis and outdated technical indicators, they won't work. Those days, they're long gone. If that's all you're relying on, the odds are already massively stacked up against you. If you want to change your results, then you have to change your thinking. If you want to learn our exclusive research-driven trading approach that is never taught to retail traders and only reserved for professional traders in the banks, the hedge funds, with access to powerful game-changing insights, including where the banks and hedge funds they're buying and selling in real time, the key liquidity zones so you can enter and exit the markets with pinpoint precision, alongside the fundamentals, the macroeconomics, the capital flows, the daily, weekly, monthly, and quarterly real-time data-driven cycles, the intermarket correlations, then you need to join our mentorship program. If you want to successfully capitalize on the huge money-making opportunities ahead, build significant life-changing wealth, then there's no better time than now. If you want to upgrade your income, then you have to upgrade your skills. Never underestimate what you can achieve in the next few months from now with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to our institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP.